All right, welcome everyone to Going Live with Good Soil. We're back, Emmett and I again this week to talk about macro market developments, a couple other things that are going on. Roblox released their earnings last night, had the earnings call this morning, so I think there's no shortage of content for us to dive into. Thanks everyone for coming. How are you doing, Emmett?
I'm doing all right. Yeah, just it's been a crazy few days for Tesla. We'll get into that, I'm sure, and we typically start with like macro market stuff, and we'll talk about some Roblox stuff, their earnings yesterday and their call this morning, and there's some stuff to talk about. So, why don't we kick it off with Roblox, Matt, if that makes sense? Is there something that impressed you or anything in particular? I think we both listened to most of the call this morning, and we heard their earnings. And is there anything particular that struck you about it?
Yeah, it's. I feel like investors are really struggling with what to make out on this report. So there were, potentially some conflicting signals. I mean, the one that I think got the most attention because it was a negative, potential was, the flat bookings. So they release revenue as well as bookings. Bookings is kind of what they bring in, and revenue takes out the impact of deferred revenue. So bookings were relatively flat sequentially, although they were up pretty drastically year over year. So for the same quarter, Q2 of 2021 compared to 2020. But sequentially, it was only about 2% growth in bookings. So I think a lot of investors saw that as maybe, the growth is leveling out, and the DAU growth was also a little bit slow. And then there were some concerns, I think, also with the U.S. and European growth. So those were, I think, the headlines that most people kind of initially saw, which probably resulted in the stock taking a pretty decent drop. It was down about 7 or 8%, and then it recovered. It was actually in the green for a little bit, back down in the red now, but I think it's recovered nicely since. And the takeaway I got from listening to the call is that they disclose a lot of these quarterly and even monthly metrics that I think investors pay a lot of attention to and probably overanalyze. But Roblox is really thinking in the long term. They talked a lot about China on the call and how they're really trying to lay a foundational groundwork. They also talked a lot about the balance that they're trying to do to keep the platform safe for younger users while also kind of enabling more kind of mature content in a thoughtful way that will allow greater stickiness and greater penetration into those older age groups. So I really like management teams that are kind of thinking year to year, and even in decades, as opposed to kind of monthly metrics. So that was I think, to me, the good outweighed the bad on that call. But what was your take?
Yeah, I mean, I really liked the growth in the 13 and over category, and the non-US growth was impressive, obviously. But the fact that they're growing their 13 and over demographics so fast is good. I mean, it's probably a much smaller pie to start with, so it's probably easier to grow that at a faster rate than their massive chunk of 6 to 12-year-old users or whatnot. But I do think they're successfully expanding their demographics in terms of age, and internationally, they're building a presence in China in a very long-term focus. The one stat I heard in the call that I want to keep an eye on, or that's a little not concerning, but just not as impressive as I was hoping, was their daily active users in the U.S. I think it was in the U.S. and 13 and under, or just in the U.S., but it was only 5% year over year, I believe. So it wasn't as
quarter over quarter or year over year.
Maybe it was quarter over quarter. Yeah, it was sequential, but still 5%. You'd expect for a high growth company to grow more substantially. Year over year, it's not year over year. That would be very it was quarter over quarter, and it just wasn't as fast. I mean, you definitely don't want to see a downtick in growth, but we're kind of on the cusp of flat to downticking, and that's like if they start downticking, So that was a little bit of a concern, but they did talk up the numbers in July a lot, and they said, like, I think it was their CFO talking, how internally they were really surprised by how successful July is going so far. And I feel like they're very honest. They're not stock pumpers. Right. they're a very different company culture. You know, even if you go on Glassdoor, they have like one of the highest, you know, they have like the highest satisfaction rating of like any company I've ever seen on Glassdoor. So that's impressive too. That's a great long-term big picture signal to me too, is that the employees who work there really love working there, love the company, love the CEO. So that's good. Their China growth. Also, another interesting stat was, I think they said a year ago, 58% of their revenues was from the top 10 Roblox experiences, which is pretty concentrated.
Yeah, I did hear that.
Yeah, and now their top 10 Roblox experiences only make up 37% of the revenue. So it's definitely, that's a good thing in signaling like a wider variety of experiences that a lot of people like, you know, and that I think in different cultures, different countries, the top 10 experiences are a bit different, but there's some overlay. So that's also going to introduce more diversity in experiences. So I'm excited the next couple of years, what could flourish here. China, you know, they partnered with Tencent in South Korea. They mentioned some stuff going on there. And, you know, I think you know, they mentioned their top game in China is called Livetopia, I think. So I'm going to, you know, later today, see if I can get my kids to try that game and see what they think of it, because I'd be curious to see what my kids think of the top Chinese content created game. I'm curious. So
yeah, it's interesting because they did talk a lot about, you know, how there's a trend towards kind of customized, you know, content for local areas, while at the same time you kind of have some mega hits that translate across all geographies. So I thought that was a pretty interesting point, and I think historically it's been kind of more U.S. mega hits that are, you know, exported is not the right word, but, you know, essentially exported globally on the platform. But I think you may see more, you know, kind of Chinese content or, you know, content developed in other geographies that becomes a hit worldwide, and I think that was pretty interesting. But yeah, it did strike me that there were a couple trends that seemed like a tipping point. So, you know, you mentioned the users 13 and over potentially being a small base. I think they actually said this was the first time that it was over 50% of the users were actually of the 13 and over category. So I think that was a pretty big milestone for them to you know, finally cross over that you know, that 50% threshold. You know, and then the other item that kind of struck me is, you know, there's potentially this concern about the growth slowing, but at the same time, I think if you look at the year-over-year growth, you know, I think a lot of people were thinking that was in the height of the lockdown. Essentially, I mean, Q2 2020 was pretty much when all kids everywhere were, you know, at home, not really, you know, doing anything, and to still grow. You know, or not sequentially, but year over year in the way that they did, I think is a really good sign. So yeah, maybe sequentially it wasn't the most amazing quarter, but I think looking at the big picture of how they're doing, kind of the growth year over year, that's a really good trend, and I think I would expect that we'd see slightly higher sequential growth going forward, given some of the trends that we talked about already.
Yes, absolutely. Yeah, so we're still pretty overall bullish on Roblox, I think, after this signal that we've been given on this earnings report. July was very impressive, you know, with all the pent-up demand for vacations. I'm sure people are going on this summer camps versus last July summer, and they you know, so it's exciting also that every quarter, it seems like the last two quarterly earnings, and hopefully going forward, you know, they'll be, you know, when they do their quarterly earnings in, I guess it would be the beginning of November for Q3. Then they would also show October's metrics in addition to the third quarter. So that'll be good to get like kind of the latest full month's metrics. I think they're not afraid to kind of show that on these earnings reports. So that's good that they're confident in showing that. And yeah, we'll see how it goes the next few quarters. I mean, this company's got a lot of growth ahead of it. I don't really see any major competitors, to be honest. I mean, some people say Steam or whatever, but I don't think any of these other platforms are as friendly to developers and to an entire like ecosystem as Roblox is. I would agree. Like, I'm not like super techie, but I don't understand it. Like I can't go to one game. Like, I don't even know how to download. I get plugins, and I'm like, what the heck? I don't even know how to like my Windows security is like blocking stuff. So it's just like you have to kind of be tech savvy to use Steam, in my opinion, at least to some degree. Roblox is just plug and play. Like a grandparent can put it on their iPhone and start using it with their grandkids. It's pretty good.
Yeah, I've tried it around. I'm not a gamer by any stretch, but just to really understand the company more, I've tried out the product on my phone, and it was super easy to use. And I think they've got some pretty interesting things. The other interesting thing, so we talk a lot about kind of asymmetries and options for or potential for outsized returns on the upside. One of the things I really liked about the way that they think about their business is they're really focused on kind of core user base growth, but then on top of that, they talked about the potential to solve technological problems for things like concerts going forward. So they mentioned one of the events they have. I can't remember who the artist was, but they had 4 million users attend this one kind of virtual event. Which is an astonishing number. I mean, you think of selling out, like the biggest arenas in the world would be, around 100,000 people. So to be able to get, 4 million people into the platform that way, if that's a trend that can accelerate, or you start having those sorts of events happen more regularly, I mean that can be just a huge catalyst for growth. Where maybe somebody's not interested in playing a game necessarily, but they get on the platform because of a concert, and then they find other virtual experiences that they might like. And then from there, they were talking about even using it like for education, as like they talked about physics simulators for kids, and then also training things that can be used for 22-year-olds or 30-year-olds at work to kind of get together with coworkers. So I think there's all sorts of unique applications that are kind of outside the core of what Roblox is doing, that really lead to that kind of upside optionality if one of those really takes off in a big way. So yeah, I'm seeing a couple comments on background noise. I've got a couple kids running around outside, so I'm going to shut a window real quick, Emmet, just to try to cut down on that. But yeah, I'm right here.
Okay. Yeah, no problem. So moving on from Roblox, I guess, kind of the macro markets, this whole Afghanistan thing, do we think, it's such a tragic situation over there. I mean, it's like unspeakable, the stuff that's about to happen and the stuff that's already happening. It's really, really hard to accept, but then I also have to remind myself, there's things like this all over the world all the time, in parts of Africa or North Korea, prison camps, there's just tough situations all around the world, which is, but this one kind of unfolding before our eyes is really tough to see. And we touched on it yesterday a little bit, but it does, I wonder if it's sort of putting a drag on the markets a little bit, lowering people's kind of enthusiasm in general, and maybe some jitters with geopolitical stuff going on now. And I mean, in relation to the markets, do you think it's a major role in kind of what's going on with the downs and some of the, especially the growth stocks that we're part of?
Yeah. Yeah. I mean, first and foremost, I mean, it's a human tragedy with what's happening there. Really, no part of this has been managed well, and that's not a political statement by any means. I know a lot of people are have political opinions on this, and I try to look at it from a human perspective, and I think it's just an absolute tragedy what's going on there. It's hard to kind of separate the human element from the the investor element, and I want to make a lot of money by seeing through the human tragedy that's playing out before our eyes here. But at the end of the day, as investors, we need to take in all data points and kind of make informed decisions about where the market is going based on that. I do think it probably spooked the markets a little bit. I mean, anytime you have instability of any sort, whether it's economic concerns like inflation or geopolitical concerns, I think that always spooks markets, and growth stocks in particular are vulnerable to macro declines. I think probably more than more stable low growth companies are. So I think that probably played out a little bit. I mean, over the weekend, we got kind of that news and a lot of the images coming out of Afghanistan. At the same time, there was this IAEA report about Iran enriching uranium to a new level that hadn't been reached before. So, that's another, I think, bit of bad news coming out of the Middle East that kind of plays into this overall geopolitical uncertainty. So yeah, I do think it's spooked the markets a little bit. Growth stocks in particular, like we said, have been hammered, and my sense is it's probably a little bit overplayed. Even, I mean, maybe there's increased risk of some instability in the Middle East, or maybe even another terrorist attack is slightly more likely now than it was previously. But I look back to 2001, and those markets got absolutely hammered when the 9/11 really shook the country down to its core. But the recovery after that was really strong and quick. So I think while we may have greater uncertainty, my sense is it's probably going to be short-lived because it's not necessarily core to any of the metrics of growth stocks like Tesla or Roblox or any of these companies.
Yeah, I agree. I think people are losing a little bit of confidence in the security they thought they had with regards to our government being able to kind of, protect the world or, prevent such tragic things to happen. And you kind of assume, we're in Afghanistan, we'll make sure it's a safe transition, or we're still in Iraq, we'll make sure the government, is stable there. There's other things that you just start to second guess, like what if there's a takeover of Al-Qaeda or ISIS in Iraq that's similar to the Taliban's takeover in Afghanistan. So anyway, there's a lot of things to kind of be concerned about, and I think that's always the case. And
I was going to say there's always something to be concerned about. You just open a newspaper these days, and they always have the worst news possible to share. So there's whether it's the coronavirus or these concerns, it's there's always something that's reason to fear and to want to convert into safer investments like cash or bonds. But I think bonds, corporate bonds in particular, this is not something we've really talked a lot about in the past, but speaking of macro trends, there's concerns about inflation potentially. Kathy Wood has talked about her concern is more on the deflationary side, and I think if that happens, then some corporate bonds might be more at risk than some of these growth stocks. So I think there's especially when you look at a lot of the highly levered entities that have just taken advantage of this low interest rate environment to really lever their balance sheet probably more than they should have. I mean, if you look at the other auto OEMs, for example, I mean, they're just insanely levered compared to what Tesla is. Yeah. And I think that's a kind of a ticking time bomb. If rates ever, go back up, I'm not saying in the short term, but eventually, that could have a huge impact on corporate balance sheets and could be bad news for bondholders. Yeah,
absolutely. Yeah. So, anything else in the kind of macro market? I mean, the growth stocks, a lot of them are taking a hit, and especially Tesla. Maybe we should move into kind of Tesla and
down $75 in the last couple of trading sessions. It's Do you think what's your sense on is this all on the back of that NHTSA investigation report, or to what extent do we have other factors kind of playing in here?
Yeah, my gut feeling is that was sort of the trigger. I know some people are saying, the news that Model 3 line was shut down, but that happens sporadically. The Model 3, as long as it wasn't like unexpected and someone's talking about like the model, maybe it is unexpected, but even it gets shut down unexpected for a day or two at a time sometimes. But if it's not like weeks, then I don't think it's a major issue.
And I don't know if you saw, but as of Monday, it was back up and running. So that was a 1 to 2 day event at most. So that was. I agree with you. Yeah, like you're going to have these events from time to time. These plants don't run 24/7, 365. That's just not how this works.
Yeah. Years ago, I mean, there used to be that the Tesla lines were shut down every quarter, like for 2 weeks at a time. Like back when it was just Model S and Model X. and you track the deliveries and production. You try to track production deliveries every week, one week to another. Like, oh, they did 1,000 this week. They did, I think they did 1,200 according to the Vint Tracker this week, and then you'd have to calculate, oh, they're shut down for these 2 weeks. It's a scheduled shutdown. You'd know all this. And so it was part of the quarter by quarter, but now they have like lines for a lot of different cars, and maybe it gets lost in the noise, but I wouldn't be surprised if that 1 or 2 day was like a planned shutdown for just like fixing a bunch of stuff they needed to fix. And and that's going to probably happen every couple months, I would imagine, in these factories for this line. So I'm not concerned about that. Yeah.
Yeah. And just for folks who may not know, I mean, that's really standard practice, but I think Tesla does it much more efficiently than the rest of the auto market. So, there's a summer shutdown, which has been automotive practice for as long as I've been aware, where typically the first 2 weeks in July, all, probably 90% of US auto plants shut down, at least for GM, Ford, and Chrysler. I'm not sure if that's necessarily true for, Toyota and Honda plants that are in the South. But, the auto companies have always used that to do kind of the model year turnover of all the tooling that they need to do. So there's been very predictable shutdowns where they would try to mash everything in to make the upgrades to the newest model year. Tesla just doesn't have model years, although like NHTSA still uses the model year convention for some strange reason. So, Tesla's just saying, we don't need a 1 year recycle time. We're just going to constantly make improvements and roll them out. And so what you've seen with GM and Ford and others with this chip shortage is they're just extending these, these what have historically been 2 week summer shutdowns to turn over the model year. They're just turning into months long shutdowns in many cases, where they're just saying, with chip shortage, so we're going to just shut these plants down for, an extra 2 weeks to an extra, 2, 3, 4, 5 months, depending on which plant it is. So it's there's a lot of attention that Tesla gets, but I think the other companies are probably in worse situation from a production utilization standpoint than Tesla is.
Yeah. So getting back, I think the drop is a lot of the NHTSA announcement news is just a whole new kind of cycle of FUD, and like, Mark Fields, of Ford was on CNBC earlier talking, like the news pundits love to just run with anything negative Tesla, because we all are watching it. Like, what the heck are they talking? Even if we watch it angrily, we're watching it. So they just love to talk about, any potential negative Tesla news. And, it's so ridiculous, this whole NHTSA thing. I mean, I think if anything, maybe it'll bring more transparency to how safe Tesla is, which is good in the long run. And, some weak longs might have sold off because of it, or maybe some new shorts tried to enter a short position. And, Michael Burry's trying to pump, negative growth stocks again. And, all the growth stocks are just going down anyway a little bit right now. So it all kind of mixes together to, maybe the $75 drop in Tesla the last couple of days. I can make sense of it. And let's not forget, I mean, you and I have had the position that Tesla has really been priced in to grow already. And so like this price range we're in of like, $600 to $800, or you call it $550 to $750 or whatever, like this kind of range we're bouncing around in, this is just kind of par for the course, just bouncing back and forth in this range, maybe where, you have a little news here, a little news there. You kind of bounce up and down $50 or maybe $100 over a week even, but you're just kind of bouncing in this range for a long time, because the stock went up 10x in the last, 24 months before this or whatever. So there's a lot of growth priced in for Tesla in this kind of range. And even when they have incredible earnings like they did this past quarter, the stock's still kind of tapering in this range and not really breaking out of it yet. It might be a few quarters away. And that's part of the reason we really like that put trade we put on that we've talked about a bunch of times for Tesla. Mm-hmm. And so, I mean, I think this could just be more, we could see more of this kind of bouncing around $600 to $800 price range for a long time, until maybe self-driving, the full self-driving really pans out. So, I mean, full self-driving, what are your thoughts on that too? The new version? Yeah.
So I've watched a couple of the videos now. I think I maybe a month ago had been slightly more bullish on the timeline than I am now. I think, after seeing a couple of these new vision only releases come out, I mean, this last one was a week late and then a day late after that. So hopefully the cadence can pick back up. But I think right now I'm kind of just realizing that this is, going to be a slightly slower process than maybe I initially had hoped for. So, I kind of hope they get to wide release by the end of this year still, but wouldn't surprise me if that slipped to next year sometime. So that'll, I mean, that was something that we talked about as a potential catalyst for a while now. And I still think it will be a catalyst. It's just a matter of when. But the thing that still surprises me is how profitable the underlying manufacturing business has become. So kind of my thoughts on, where we bounce around for the next, 6 to 12 months or possibly even beyond. I think that, the core profitability of the manufacturing is going to provide something of a backstop. I mean, if they can continue to produce earnings and EBITDA and cash flow numbers, in a similar, vein to what they did in Q2, potentially a bit higher too as deliveries grow. I think it's going to be hard pressed for the stock to fall much further than it is right now, just because the PE multiples can't really fall, too much. I mean, certainly you can have some compression and you could have macro movements, but it seems that again, talking about asymmetries, it seems like there's probably going to be more room for those multiples to expand going forward, or for the underlying business to improve more so than there is for a big contraction or correction.
Yeah. I was on Dave Lee's channel Sunday night. We recorded a chat that was released yesterday, and he has this really interesting metric he's kind of put out there about the EBITDA multiple, and comparison to like Amazon's EBITDA multiple from 2011 till now was like between 25 and 60 to 1 or something. 25 and 60 basically EBITDA to share price or market cap or whatever, and if you kind of measure Tesla kind of in that same range right now, it would be between like, I think, $300 to like $1,000 right now or something like that. So, I mean, it could fluctuate in a wide range, but it'll be range bound. But this range will increase, like it might be 300 to 1,000 now, but maybe in 2 quarters that range, if it's consistent with this kind of EBITDA multiple Dave's kind of throwing out there, then maybe the range would be like 500 to 1,200, and then a year from now, maybe that range would be like 750 to 1,500 or something. So, I do think there's something to that. When you try to measure someone like Amazon, which people use traditional PE, but it doesn't apply to companies like Amazon or Tesla. It's a very different way to try to figure out how the stock should be evaluated or could be made. Logical sense could be made out of its evaluation of some sort. So, I found that interesting. So that means we could go quite a bit down, like based on the 25, multiple, we could go down quite a bit still from here if we were at the lower end of that range on the EBITDA range that Amazon had, for example. So it's it could bounce around quite a bit more than 600 to 800. It could be 400 to 800 or something potentially too.
Yeah, it's certainly possible. I guess part of the point I was trying to get at is I think Tesla's been executing on the core business much more successfully than I think even a lot of the bulls had been expecting. So even if we have maybe a slower rollout of FSD, and that's not a boost to profitability that maybe we'd hope that it could be. The underlying business is been so surprisingly strong that if you're increasing EBITDA then faster than analysts expected, then even if the multiple is on the low end, then that does create a little bit of share price protection, just with that continued execution. But we'll have to see. I mean, there's a lot of price pressure right now. You've got declining ASPs and a chip shortage, so. It's hard to boost EBITDA in that environment, but Tesla's been really successful so far at doing just that.
Yeah, absolutely. Yeah. And then we have AI Day coming up in a few days. That's crazy. I mean, I remember when it was just like a rumor of AI Day coming, then Elon mentioned it, and you wonder Elon time, is that going to be a year late still? Like, like Battery Day took a year longer to come out, I feel like, from when he first announced it. So it's 2 days away now. I mean, that's going to be historic. It's a historic day in Tesla. I mean, arguably AI Day, Battery Day, and the self-driving day, those 3 days are more historic to Tesla big picture than any, quarterly earnings or annual meeting, so this is a really historic day for the long-term vision of what Tesla will become,
Yeah, absolutely. I mean, it's something that we've been speculating on for a long time, and I mean, I think it's so easy to get excited about AI in general. But AI in the real world can be things as stupid as like a good Spotify playlist for that's generated based on what you listen to, which of course is valuable, but that's been around for the past decade plus.
I mean, my refrigerator says it has AI in it by keeping the temperature the way I want.
Oh gosh, yeah, I know. Everybody says they've got AI. We can say that we're in an AI hedge fund now, just because it's like everybody's got some little small claim that they could put out there. But the really hard thing to do with AI is like identification of very difficult to interpret trends, and then being able to act on those in the real world. And that's something has
real world applications of AI using robotics. You know what I was thinking today? I was thinking this morning, like the tragedy in Afghanistan, so terrible, right? And it's like, how do you get these people out of there? They're all in the airport. They're all like, the U.S. Air Force is, the bureaucratic U.S. government is like the only thing we have to rely on, really. But if you fast forward 10 years from now, and this was happening in 10 years from now, I can envision a future where like Elon says, all right, let's deploy the Tesla, supersonic eVTOL jets to Afghanistan airport to land and pick up as many people as we can and bring them to the nearest hub in India and go back and forth with, we'll use our droids. And so if people aren't in danger, we'll use them to help shepherd the people in safely. I could picture like a future, like a science fiction type future where like, Tesla real world AI robotics and combined with their, eVTOL, supersonic eVTOL jets are like coming to the, to say like private industry is coming to save, the Afghans as much as possible, more so than the government, so it's too bad that future isn't here yet, but I could certainly envision that if it was 10 years from now.
Yeah. I think it's probably going to be a double-edged sword though. I mean, one of the things a lot of the AI experts have kind of cautioned against is, using AI in the field of war, which China's already doing kind of aggressively, and the U.S. has gotten into it as well.
Sci-fi movies and books are about it. Makes us. But what if AI in the field of war, like what if this Tesla, what if there was like programmed not to touch a human being, just to kind of like show, walk, like humanoids over there, just to like only be, they can get destroyed, but they can't hurt anything or anyone. They just walk and like show people where to go or something. So it could be like entirely peaceful. I mean, that's how it starts, right? But then Skynet happens later. But like, I mean, how could you resist that if you're saving so many people's lives right now?
Yeah, no, it's doing it. I think that's why people have such divergent views of it. Because even within the field of war, what you're saying is completely legitimate, and you've also got the real tragedy of clearing houses, kind of room to room. Where you've got soldiers getting killed or potentially killing an innocent civilian just because they're jittery in a dangerous environment. So if you have an AI robot, as Skynet-ish as that might seem, that's potentially a better outcome than just having humans in that scenario. But you can push that too far for sure. So it's I'm very curious to see how
but it goes in bad direction eventually, right? Yeah. So I mean that's what people assume, but who knows? Interesting thoughts about that with AI Day in the future.
Yeah, I'm certainly curious to see what. Not that Tesla will be doing any sort of DoD kind of contract that would be revealed at AI Day. I'm really excited as an investor to see what they have coming down the pipeline, because we've been speculating on it for so long, and just to finally have actual answers and Elon up there describing what they're going to be doing beyond just kind of autonomy. I'm super excited for that.
Yeah. So Anything else, Josh? Should we take some questions? Maybe let's start taking some questions. I know we have a number to get through. So, first question is from iteration_O on Twitter. Could this investigation actually be a start of a good thing, and down the road further, this could actually validate full self-driving, or FSD? And I think it could be. I mean, this investigation is sort of I listened to Rob Maurer's podcast last night, Tesla Daily, and he really goes into detail and does a good job giving a comprehensive explanation. But it's a preemptive investigation, which typically takes like 3 or 4 months to happen initially. Most of them don't turn into anything, but if it does, then there's kind of like a more formal engineering investigation, which could take 10 months or 12 months or a year or longer. And so it could be a long time before we really see the results. So that kind of made me realize, okay, at first when I heard about this investigation, I was like, what does that mean? Does that mean like in 2 weeks, Tesla's going to be told to take off full self-driving off all cars? Is that possible? In my head, that's like what's running in my head is a possible bad situation. But, it seems like that's extremely unlikely. That more likely this is like, a 1.5 year play out at worst case, if not 4 months, they're kind of let off the hook. But even after that time, Tesla will be so far down the road with full self-driving beta, it'll be wide released by then. I mean, to me, it's a non-event for Tesla having to, take off full self-driving. It'll be so far down the road. And I think it'll just, bring about more discussions like we're having here, and people having dinner tables with their family who aren't as familiar to kind of get to the truth, to get to the bottom of things. And that's good overall for Tesla. Short term, it might inspire some fear, but what are your thoughts, man?
Yeah, I think, let's just assume that the investigation kind of wraps up and there's no, developments that come out of it. It's not going to make the news cycle, so I think it's going to take time, whatever happens, for the average person to just get more familiar with it. My sense is the ball's really in Tesla's court to get the software working the way that it should. And if they can do that, in a way that's demonstrably safer, which I think they already have. I mean, if you look at their safety statistics already, it's already demonstrably safer than just your average ICE vehicle. So I don't think there's going to be any sort of negative news that kind of comes out of this. But I also think whenever this investigation does wrap up, whatever the conclusions are, if they're good, I don't think you're going to see like a Business Week article about it. People are going to say, "Oh, great, I'm going to go buy FSD now." I think it's just the kind of the trend of the media now that the negatives are picked up, and the nuances on the positive side never make the light of day.
Yeah, I agree. Next question is from Mark Suzuk on Twitter. Are you doing any short-term trades around AI Day? Do you trade around CPCA monthly numbers? We're not doing any in the fund. We're not doing any special short-term trades specifically around AI Day, and we haven't done anything like that around the CPCA monthly numbers. It doesn't mean we would never do it. Like maybe if Tesla was at like a lower end of what this range is, we sort of think like if we got down to like the 400s or something, and we thought there was going to be like strong numbers reported, then we might do something, consider it. But it seems hard to make money on short-term opportunities with Tesla at this time. But
yeah, I think especially with like the CPCA data, we don't have. I think if you're going to play in the short term like that, you really need to have some sort of edge on estimating those better than anyone else, and that's not something I feel we have an advantage on. And even if you get the numbers right, a lot of times the market interprets in the opposite of what you would think would happen. So no, we try not to trade around short-term things like that.
Yeah. From the same gentleman, Mark Suzuk, what are your goals with Good Soil? Why are you doing the channel? Are you looking to attract investors? This is a good question. So our goals with Good Soil Investment Management, we've talked about it before, but we sort of want to evolve. Ultimately, we want to be a good example in terms of giving back to charity. We want to make money for our investors, but our higher purpose is that we have a fee structure where half the fees go to charity. That's written into the prospectus of the fund. And so if we can succeed to a point where we inspire another generation of emerging managers to do something similar, and help with the trend of sort of like conscious capitalism and giving back. That's sort of our higher purpose that really drives us, not just making money, which is most fund managers' obvious goal. Ours is sort of a little different, where we want to make money for our investors and for ourselves, but really we want to be able to give back to charity and hopefully have a trend similar to ESG, but maybe in the future the trend would be giving back. So investment managers would all be writing in their prospectuses, hey, we give 20% or 10% or 50% of our fees to charity. And so capitalism kind of evolves a bit further. The most successful hedge fund managers and investment managers out there are giving substantial amounts to charity. And so I think that could change the perception of capitalism amongst the younger generation as well, where there seems to be sort of an increasing threat of socialism creeping in as kind of an easy way out for a lot of younger people who have a hard time kind of, I think, rising up the ranks or realizing that they have to work hard to make money and such. I mean, and they see a lot of suffering too, and they see a lot of inequalities or unequal outcomes, I would say, more so, which I think a lot of people try to think socialism is a solution for. So that's sort of the higher purpose, and the channel. The reason we're doing the channel is trying to get the word out, and there's a lot of people that ask for our opinions on things, and so we thought Matt and I talk a couple times a week already, and we thought we'd just kind of sort of open source some questions, and talk about it publicly for people to listen who want to listen. So we'll see how it goes over time. And Matt, do you have anything else you want to add to that?
No, I mean, I think you hit it. I mean, I've had a really strong desire to kind of do good while doing well. Personally, I mean, that was in fact how we kind of first got up. I was doing my own channel, and I looked into starting a B Corp because I kind of liked some of the social responsibility that was kind of more contractual and built into legal obligations of a company. Ultimately, I didn't really like that model for reasons I don't want to get into here, but the overall goal of being a force for good while trying to make money and be a sustainable business model, that's something Emmet and I both feel really passionately about.
Yeah, and we enjoy the investing world.
Yeah,
and it's like you get to a certain wealth level, it's like I enjoy it, but I don't want to just make money for myself. You want to find a higher purpose, and to us, this is a great kind of higher purpose that we have.
Yeah, in my investment banking days, I was around a lot of high net worth individuals, and guys that were running private equity shops, and I think most of them, to make kind of a blanket statement, but it seemed that most of them were, the goal of life was just to get more money, regardless of how much money you had. And I've seen enough to know that doesn't actually bring you happiness. I mean, you need something higher than just adding an extra zero to your bank account to really have purpose in your life. So that's why I'm happy to do what we're doing here.
Yeah, it's a great question. Next question from Alex B. Do you consider potential app store fee tapering as a potential catalyst for companies like Roblox? Great question.
Yeah, I mean, absolutely. Somebody did an analysis, and I'm blanking a little bit on the specifics, but I think it was something in the neighborhood of like an extra $1 million per day or something like that. If that app store fee went down by a certain amount. So that absolutely. I mean, that would just translate straight bottom line, and I think that would be potentially a very, very nice catalyst for Roblox, but also for any other companies that have kind of large sources of recurring fees that run through the App Store. And on the other hand, that could be really bad news for Apple. I mean, they get a lot of fees on that, and that could really dry up some of their earnings. But and I think it should happen. I mean, they've got too much pricing power, I think, on that application.
Yeah, I agree. I mean, those are two nice kind of, I think, non-tangible or hard to kind of model benefits of Roblox. Is one is this app store fee, or the Apple tax kind of declining, and I think Epic has a strong case, and they're fighting a good fight for all the others that want this to happen but are afraid to talk about it. So that's a big potential catalyst that's not really priced into the stock, in my opinion. And the other one is if we had to go into lockdown again, if the government just kind of overreaches its bounds and says, all right, we're shutting everything down, no one's going back to school again until next year or something, like if something, and I can see the government trying to overreach and do that, and it would cause unrest. Or what if the next variant is even worse than the Delta variant, and maybe it warrants lockdown or whatever. But in such a case, Roblox would be a nice hedge, being long Roblox on that type of event, because that more kids are going to start playing Roblox again, even more so than last time around. So, those are two kind of nice, intangible benefits of Roblox that I think isn't really priced as part of the stock.
Yep.
Shannon TMBG says, with the nationwide labor shortage, I wonder if Tesla will have trouble finding the thousands of factory workers to run Giga Texas. Could make it tougher to ramp up. What do you think? I mean, I think that, there is a labor shortage. I think a lot of people want to come work at Tesla, though. Tesla seems to be one of the top places to work at, whether you're an engineer or just an average Joe, looking for a factory job. I'd rather work at Tesla than Ford or Union Pacific or whatever the other factory jobs are out there for things. So I don't think it's a big issue for Tesla, to be honest. I mean, I think they had a bigger issue, if anything, in Nevada and Sparks trying to get labor there.
I think they still have that issue there. Yeah,
they still have it. Yeah, and they seem to be overcoming. It's not a major issue, like where they can't get through it. But in Texas, I don't think it'll be a big issue. And I don't know, Matt, what do you think?
Yeah, I mean, I think it will be a hard challenge, just because they need so many people. But I don't think that's going to be necessarily kind of the limiting factor that impedes production out of Texas. So I'll certainly keep watching to see if I'm wrong on that point. But it seems most likely to me that getting the actual factory up and running and the equipment is going to be more of an issue than the workers. But it's one of those things you just have to keep watching.
Yeah, good question. All right. Next question from Howard Richards. Thoughts on the recent Lemonade drop? I mean, you and I have riffed on this a few times and talked about it. I talked about it with Dave a bit in that chat the other night. And I think we had kind of a really interesting discussion with one of our potential investors the other day about Lemonade. And you're the numbers guy. You're good at crunching the numbers and such. And I'm kind of like, I like to look at the big picture stuff more so. And I think we're a good complement for each other. And we're both kind of positive overall on what we think Lemonade, from the big picture, I think Lemonade is sort of kind of like the best of Robinhood in terms of user experience and the best of interactive brokers in terms of like creating their own backbone technology infrastructure, which allows them to really provide an incredible, value proposition in terms of dollar for dollar or cost effectiveness and nimbleness and ability to adapt and be global and such. So if you combine those two things, and instead of in the fintech space, but in the insurtech space, I think Lemonade is the only player that has both of those things. There's a lot of other insurtech companies out there that are just kind of piggybacking on the backbone of other legacy insurance providers, but I have not really seen one like Lemonade that built their own kind of infrastructure from scratch. Except for life insurance, I think they kind of use another legacy provider for that. But other than life insurance, I think they've built everything themselves. So what do you think, Matt?
Yeah, I mean, I almost wish we had that investor call recorded so we could, just play it here, because I think there are, if you dig into a lot of the actual numbers that they reported on their loss ratios and their in-force premium, I think there's a lot of really strong trends there that I love it as a long-term investor. I think where it's hard to anticipate short-term movements with Lemonade, it's just because you can't really apply an EV to EBITDA multiple or a price earnings ratio right now, because they're still they haven't flipped into that positive earnings and cash flow generation part of the growth story yet. I mean, they're still compared to, I would say, the rest of our portfolio, they're an earlier stage growth company. So when you're trying to assess the value of a growth company like Lemonade, I mean, you've got to go out 5 years, 10 years and say, okay, what are their long-term margins going to be like? And it's kind of like throwing darts when you're this far out. I mean, everybody had this wrong for Tesla just 2-3 years ago of what were their long-term margins were going to be. Nobody thought they'd have 25% gross margins ever, you know, but now they do on a regular basis, and they're marching towards 30%. So with Lemonade, I think you've got the same sort of situation at work, where it's very hard for average investors to kind of look beyond the inflection point and say, okay, here's where their long-term margins are going to be. This is, you know, what their long-term revenue is going to be. But I think we've done a lot of the work on that front, and I think feel really comfortable that, you know, it may take a while to get there, but in the long term, we really do like Lemonade's valuation, so we're not too concerned about short-term movements.
Yeah, we just see a lot of upside potential. Like Lemonade's at $5 billion. You know, like I don't think they're going out of business anytime soon or ever. That's their market cap is around 4 or 5 billion, and I think I would see, like, I don't ever see them dropping below like a 2 billion market cap. That would be like insane. Like I'd buy a lot of it then probably. Like they were about to go bankrupt for some reason or something. But I mean, I could see their market cap easily getting to 10 or 20 billion next year or beyond in 2 or 3 years, you know? So it just seems like one of those asymmetric potential possibilities where, you know, maybe 50-50. If you own the stock, there's probably 50% chance you lose half your money in the next 1 or 2 years, but maybe there's a 50% chance you make, you know, double or triple your money in 1 or 2 years. Something like that is sort of like what I sense with Lemonade, and so it's a risk, but you don't put all your eggs in one basket on that type of stuff.
Yep, but it's an asymmetry. I mean, if you do the expected value of those probabilities that you just laid out there, it's a very positive, you know, outcome.
Yes. Mm-hmm. It's got like a binary outcome. Like it's not going to stay where it is, right? It's either going to go up significantly at some point, or it's going to kind of stay and go down. It's not going to stay where it. Anyway, next question from Jeff Sturgis. If you could have a humanoid robot solve one special purpose problem, which problem would you pick and why? That's a good question. Probably. I mean, I think if whoever's designing the humanoid robot had this question put to them, they'd probably say building more humanoid robots. So if you could pick one purpose for my humanoid robot, it would be to build a bunch more and have those build a bunch more and just multiply, which is kind of scary to think about. But for me personally, I think it'd probably be just like, you know, construction, in fact, you know, doing the jobs that no one wants to do, whether it's like, I mean, some of these jobs are well paying. I know like garbage truck drivers get paid pretty well, for example, but no one really wants to be picking up garbage, you know, but you're paid well, but maybe it's fun camaraderie, maybe it's active, but whatever the jobs are that people don't want to do, picking up trash on the side of the road, you know, things like that. Like, I think those would be good initial problems to tackle where, you know, maybe it would eliminate some of the labor that least like. I don't know. Do you have any thoughts, Matt?
Yeah, I don't, maybe I could be wrong on this, but my sense is that we're not going to have a whole lot of humanoid robots. That form factor is, you know, makes sense for biological humans that need to do a lot of different tasks. But my sense is you'll have, you know, kind of more specialized robots that do, you know, individual things, and then maybe some software that can handle, you know, kind of deploying various specialized robots to different tasks. But it seems like, you know, just like thinking of the battery density that you would need to have to, you know, have a humanoid robot move for like, you know, 12 hours a day and still be productive, you know, that's probably going to be prohibitive. So I'm not sure that, you know, that's going to be the right form factor. I think you're probably going to have a lot of more small, you know, specialized robots, and then like some bigger manufacturing type of robots, but we'll see. Yeah,
I remember those early Boston Dynamics humanoid looking robots had to have like a big wire connected to them for power, right? So it's like, I think you're right. The battery is not, you know, the ability to get energy to a standalone humanoid robot to kind of like, you know, walk around and do stuff for a while is not great, but
because you need like both a high capacity in order to do like, you know, the jumps or whatever is the most, you know, physically taxing thing. And and then the bigger the battery that you put in there, the higher the drain that's going to be because you're carrying around a big battery all day. It just doesn't seem like the right form factor, but we'll see. I think no one's going to be right with their predictions right now.
Yeah. Next question from David Arturo. How are you currently keeping cash reserves, bonds, stable coins that you can deploy when opportune? And we sort of want to keep some cards close to our vest with our fund, I would say. But we do try to keep some dry powder available, some available equity to deploy when if and when there's a big crash. I mean, we're not always successful at keeping it. People are paying us to take risk with our fund, so we don't really keep a ton of dry powder around. But we have employed a interesting kind of unique strategy around some of our cash, excess cash recently. And the cash is basically the cash we have on hand from selling the puts on Tesla, a lot of that cash. So we don't get involved in stable stocks, he says. So we don't really get involved in bonds, I would say, or value stable stocks, I would say. But anything else you want to add to that, Matt?
Yeah, a lot of stuff I'd love to add, but probably nothing that we can disclose right now. It's maybe just suffice it to say we have, I think, a pretty interesting strategy specifically around this point that I'm excited to talk about in the next couple months, hopefully.
Yeah. All right, next question. What's your plan with those weekly Tesla calls you bought? Have you already closed it? Oh, for me personally, I think I disclosed on Twitter last week that I bought some 800 calls for like 85 cents or something like that in my personal account. And I talked about it a little bit with Dave on his channel the other night too, but I haven't closed it. Obviously, it hasn't worked out with Tesla dropping like it has the last couple of days. But if Tesla went the other direction for the last couple of days, it would have been a 50x plus return, so you just never know, so I haven't closed it. I think they're probably close to worthless right now. So to me, it's like, why would I close it when it's close to worth? Like, what if Tesla bounces back $50 tomorrow or the next day? Then I might be able to close it at cost or just hold on to it, even if it goes up another, from AI Day, from some special announcement. So I'll probably just hold on to them because they're almost worthless right now. There's no point in collecting, a few bucks on what, or like 10 cents on what cost 86 cents originally. So that's my view. All right. From Enrique Moctezuma, have you guys looked into RBLV fashion retail company? Thoughts? I have not. Have you heard of that company?
Have not either. No, I don't know anything about them, honestly.
Yeah, I mean, I
wish we had a better answer for you, but
yeah,
we only have so much bandwidth, and we like to know a few stocks really deeply rather than 50 at a surface level.
Yeah, absolutely. But what's that? I always like to start by looking at like the market cap. So RBLV, let me see here.
Looks like it's 4 billion.
Yeah. Okay. So it's big enough where there should be substantial information. If I look at like the 1 year track, it's come up a lot. I mean, something interesting to look at, but that's not really our specialty is fashion, but I'll take a little bit of a look at it later, maybe. Next question from Venice. What do you reckon about Square overall and their recent acquisition of Afterpay? Man, I think you had a couple thoughts on that, maybe.
Yeah. So this is one, I think my own thoughts on it have probably changed a little bit in the last week or so. I mean, at first I loved it. Obviously the market loved it too. I mean, for anyone who didn't see, I think, so it was a stock acquisition that's, Square issued, I think it was like 20% of their market cap that Square was paying to acquire Afterpay. So Afterpay is essentially this feature that allows users to split up a purchase. So let's say you're buying a Peloton or something like that. You can, rather than pay for the whole thing right up front or put it on a credit card, you can just make 4 installations. I think it's 4 payments, one every 2 weeks. So they're based out of Australia. They've been really successful in their own business model. And so Square acquiring this business gave them kind of another feature set in the overall kind of consumer finance playbook that they didn't really have before. So market obviously loved it. I mean, Square's stock bounced so much so that it actually paid for the entire acquisition just with the kind of gain in market cap that they saw after announcing it, which is incredibly rare. I mean, most acquisitions, the acquiring company will have like 2% down movement on average. And the acquiree will generally have a 20% pop depending on what the premium is. So for the acquirer to move so much, I think was a really strong indication that the market really loved it. But after thinking about it a little bit, there's my sense is it's good for Square to kind of get this feature. It does give them more of a kind of an inroads with some additional suppliers that or merchants that they didn't have access to previously. So they're getting that benefit as well. But it could be a race to the bottom on features like this, where Afterpay is charging around 5%, 4 or 5% to retailers to have this service, which is about twice what credit card companies would pay. So you're potentially eating into merchants' pot a little bit, and there's questions I think around how sustainable that is. So I think it's okay in the medium term, but we've started to wind down our own Square position just because I think we talked about this in the past. I think at its current valuation, there's probably not as much potential for like a 5 or 10x opportunity in the next 5 years or so. I really do love Square. I think the things that they're doing are really smart, but I think at this valuation, we're just trying to take some chips off the table.
Yeah, I agree. So hope that answers it. Let's take Alec, let's do 1 or 2 more questions if that's all right, and then it's been about an hour, so we'll try to keep this to an hour. Okay. Do you have any special guests that will come on the channel? That's a good question. Yeah. Next week I'm going to be on vacation, and Matt, do you want to talk a little bit about it?
Yeah, so I couldn't make it. It was the last week or the week before. So Dave Lee came on, and that was, I think, really well received. We actually, so Emmet won't be here next week. So I'm actually going to have Florian Mindrop. So many of you maybe don't know him, but he's a super interesting voice within the Tesla community, I think. I had him on my old channel a while ago. And he has essentially a Tesla leasing company based out of the Netherlands. It's called Mr. Green. And he has a very forward-looking view on, autonomy and robo-taxis. And so he's done some really interesting things with his fleet. I think they have over 1,000 Teslas in their fleet that they lease out to customers and provide a variety of services beyond just the lease. But one of the things that they're doing, which I think is super interesting, is trying to incentivize more of their customers to pay for the full self-driving software as a subscription. So they're essentially subsidizing a monthly price for their FSD customers so that they can purchase the FSD subscription, and then they kind of have a call option on autonomy built in that way. Their end game is to really operate a very large fleet of robo-taxis. So he's got, I think, a really unique view on the future of autonomy, and also of, I think, how it's playing out in Europe, which I think is a viewpoint that Emmet and I and probably a lot of our U.S. listeners don't get to hear as often. So I'm excited about Florian coming on next week. He'll be here for that. And we're working on getting a couple of the guests lined up as well.
Yeah, absolutely. So we hope to maybe do a series of interviews, even kind of more formalized interviews, maybe not live, but like weekly interviews or something later in the fall or in the next few months, and more will be on that in the future. So we'll talk about that later. So that, I think, wraps it up for today. Hope everyone enjoyed listening, and Matt will be on next Tuesday with Florian. I'm excited to hear you guys chat. I'm super excited for the AI Day reveal demo or recruitment effort on Thursday night, and I'm sure everyone will watch that, and we'll see all kinds of commentary on Twitter from all different people. So look forward to next week. All right, guys.